If you invest in biotech stocks, you could ride a 300% rocket in a single day. But hey, you need to truly understand this niche market to avoid crashing without safety net. If a biotech stocks get mentioned in a single group, great, but make sure to apply the lessons we learn every week here in Taxi Biotech. Get ready, we're taking off, and don't forget to drop a like because no one else is breaking this down for you on YouTube. Welcome to Taxi Biotech, a show to keep up with the latest news and updates from the world of biotechnology and to learn about its impact on the stock market. The stock data I present here is just a reflection of how companies or their clinical trials are progressing and does not constitute any investment recommendation. This is purely for entertainment. Today, this special taxi is taking you on a journey through La Cuerda Larga in Madrid. 9 peaks over 20 kilometers, a perfect metaphor for biotech stocks, effort, excitement, and beauty of this market. Drop a comment and tell me where you are watching from so I can show your region in future videos. Now let's kick off our weekly recap of the biotech stocks. Today I'll cover Organovo, Enveric and PepGen, each with gains around 100%. Stay until the end because I'll share a trading strategy for PepGen based on its latest news. The first one, Enveric BioScience. This company has an ultra low market cap of just 5 million and only 1.6 million shares in circulation. So what happened here? They secure a new patent and boom, the stock skyrocketed over 100 here. But here's the thing, I don't like trading on patents. Why? Yes, patents are important. They protect innovation, but they are not a short-term catalyst for me. There is a massive gap between a patent and an actual clinical trial. And look at this. The stock hit $3 per share, exactly where it stopped, and then crashed. Why? I mentioned this on Twitter. Enveric had already announced on January they would issue 1.6 million warrant at $3 per share. That's the exact level price where the price stopped. Lesson here, many traders got stuck here because they didn't know about this warrant issuance. This is why you always need to check the details before jumping in and avoid fear of missing out. Organovo, the chart of the example. Jump on the rocket, but avoid the crash. They just released a press stating that Lilly would acquire one of their research programs. This was confirmed in the SEC filings, showing Lilly would pay 10 million upfront with potential payments up to 50 million. Why is this huge? Because Organovo's current market cap is just 11 million, so a 50 million deal is a massive announcement. Moreover, Organovo is struggling to stay listed on Nasdaq, and this news gives them a major boost ahead of their June 15th deadline. Sounds amazing, right? But here is the twist. What did Organovo do the very next day? They announced a stock offering, issuing 1.7 million new shares to raise $2 million. They can still issue more shares to raise up to $5 million in total. So we went from Lilly is buying a program for 10 million to dumping 2 million shares in a day, with more potentially coming. Hey friends, this is biotech. You need to understand a company's cash needs and past behavior to predict these unexpected moves. And the last one, PepGen. PepGen has taken the spotlight. Why? Because it has reported positive results from one of its clinical trials for myotonic dystrophy, causing the stock skyrocket. Stick around till the end as we will be developing an investment thesis on this. But first, what is myotonic dystrophy and how does PepGen drug works? Patients with myotonic dystrophy have a problem with the maturation of their messenger RNA. In this condition, the DMPK and MBNL1 proteins binds abnormally, blocking the production of essential proteins for muscle function. PepGen drug works here by freeing MBNL1, allowing it to function properly and generate functional mRNA. It achieves this by by binding to DMPK with a specialized oligonucleotide. PepGen recently presented this scientific poster analyzing different doses of this treatment in primates. Here, they show how the higher dose, the greater correction in the number of mRNAs can generate, and most importantly, a complete correction of myotonia was observed in these animal models. This is great. So far they have shared data on their intermediate dose, 10 micromolar, and expect to publish results for the highest dose, 15 micromolar, in the second half of the year. So the stock price skyrocketed just with the intermediate dose. If the higher dose data turns out even better, we could see another price jump in the future, but could be factors affecting the PepGen stock. For example, they have two main research lines, myotonic dystrophy and Duchenne muscular dystrophy. In Q3 2025, they will present data on their Duchenne drug at dose 10 micromolar. But here's the concern. In previous trial with healthy volunteers, this was not their best dose, you can see here. And on July 13th, when they presented data for the 5 mg per kilogram dose, the stock plummeted 41%. According to this poster, the 10 mg dose appears much better than the 5 mg dose, but this percentage here still don't inspire much confidence for me. Additionally, this molecule is currently on clinical hold, and the resolution for this clinical hold is imminent. This is not new for them. Back in 2023, they faced a similar situation and successfully resolved it. Moreover, on the day of that news appeared, the clinical hold, the stock rebounded well here, suggesting that the hold could be lifted. So finally, the investment thesis here, not financial advice of course. If the stock has already charged 100% based on the myotonic dystrophy data and the upcoming higher dose data is expected to be even better, we could anticipate another revaluation when those results are released. However, we are also awaiting data on the other molecule, the Duchenne drug, and I'm not as confident in it. There could be a sharp pullbacks before the end of the year due to negative news, such as an extended clinical hold or weak Duchenne trials results in Q3. If that happens, it could create a buying opportunity before the potential positive myotonic dystrophy data in Q4 2025. But there is not be as easy as that. PepGen faces strong competition. The good thing about PepGen is that only has a market cap of 100 million, making it much smaller than its rivals. For example, Dyne, 1.5 billion market cap but with weaker data. Check out an analysis of this user on Twitter. I will leave this in the comments below. The strong company here is Avidity, 3 billion market cap with a pipeline that significantly overlaps with PepGen. Their molecule has similar mechanism and phase 2 data suggesting meaningful improvements in hand opening, strength and movement compared to placebo. Avidity has an ongoing phase 3 trial for muscular dystrophy set to conclude in Q3-Q4 2025. They plan to apply for market approval in 2026 with the first approval request expected for a Duchenne treatment by the end of 2025. Alright, to summarize, we could take advantage of sharp pullbacks in PepGen stock due to negative news, waiting for best results in muscular dystrophy at the end of the year. However, if Avidity releases strong phase 3 data for the same disease, which they are expected to do in Q4 2025 or early 2026, if they present this data before PepGen could end up in a weaker position, of course, so this thesis could be cancelled. This means we have a window of opportunity for a few months at the end of the year. Again, this is not an investment advice, just a hypothesis. What do you all think? And now let's wrap up with the main lessons from all these videos. The today lessons highlighted in yellow. Stock float matters. When interest in a company increases, the supply of shares plays a big role. It is important that we always check SEC filings, both before and after major announcements. Another thing is important, to follow scientific data more than chart patterns. And of course, be aware of overreactions, especially to neutral news like patents. And finally, we'll never time the market perfectly, obviously. Dollar cost average in anticipation of good news is often a solid strategy. And that's it for today. We're halfway through the journey. Let's keep learning and see you next time.